Good morning, ladies and gentlemen. Welcome to Market Forecast. This is Butchora Options University. Monday, August 19th, 2013, as the summer is drawing to a close and the kiddies are back at school in many places. Access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options, and we're not a service that tells you what to trade. We're not improving or implying or guaranteeing any profit, and as always, do not trade with money that you cannot afford to lose. Taking a look at last week, what we had was a negative week. Looking at the Dow, NASDAQ, S&P 500, and Russell 2000 respectively. Looking at the change for the week, we see nothing but negative numbers, being led down by the Dow down 2.2%, the Russell down 2.3%, S&P following closely behind at 2.1%, and then finally the NASDAQ minus 1.6%, still leaving us with lofty yields for the year as we saw our first real pullback that's taken place this summer, giving us year-to-date returns in the Dow of still 15%, in the NASDAQ of 19%, of the S&P 16%, and the Russell 2000 up 20%. Quite a year, as prior to this they were all in the 20% bracket or very close to that. Looking at economic announcements, lots of them last week. Certainly, I don't think that's what really pulled the market back. What pulled the market back was normal cyclical moves that take place in the market. Looking at economic announcements for the week, let's look and see what's coming as we look at Monday, August 19th. With the futures relatively flat as we go into Monday morning, we see that Monday we have very little happening as far as economic announcements. Looking at Tuesday, we see very little happening as far as economic announcements. Looking at Wednesday, we see we have existing home sales coming out, FOMC minutes coming out at 2 o'clock, which probably won't move the market all that much at this particular point. Jobless claims Thursday, August 22nd at 8:30, our weekly reports to see exactly what the economy is doing. Jobless claims have been really coming in quite favorably as far as the numbers that are coming in. PMI manufacturing prior to the market opening, and then we see economic leading indicators for the last month coming in at 10 o'clock on Thursday. Looking at Friday, we see all we have is new home sales. So all in all for the week, we're not showing anything like we showed last week as far as the number of announcements that we've taken place. Will the market respond at this point? Will it bounce back? Where are we sitting? Let's take a look at the SPX and see exactly where we are, what our trend is. Absolutely had basically some kind of a sideways trend after a big up move as we consolidated this big gain that took place from May through the middle of July. So we had a very, very nice uptrend take place. Tried to get a breakout up there at around 1700, got as high as around 1710, and now what we've done is we've pulled back. There's the 30 above the 50 above the 200, classic uptrend with the consolidation taking place, and we've now pulled back and resting on that 50-day moving average. Now the last time that we went down near that 50-day moving average, we didn't make it down to the 200-day moving average. The question is, at this point, exactly what is it that we're going to do moving forward? Sitting on support at the 50-day moving average, which is one of those buy signals that the big boys sometimes will use. So we see 50-day moving average. Now the question is, where are we going? We going lower? We going down to the 200? Or some approximation thereof? Or at this point, are we going to start our way up and go back and consolidate at this level? Today will be a crucial day to see what's going to happen for the week as we see the SPX taking place. Didn't show as much last week as far as any gains. In fact, just the opposite as we saw our August pullback take place. Not as deep a pullback as we might see before this summer is over as we go into October. Remember, we're cyclically, we're in what should be the worst 6 months of the market, but we certainly had a nice little run as this summer took place. What did the Dow do? What kind of relative relative strength did it have? S&P sitting at the 50-day moving average. Looking at the Dow, we see the Dow actually broke through the 50-day moving average. Still got the classic 30, 50, 200, but actually broke through a little deeper pullback as far as moving averages are concerned out of the Dow. So is there room below? It definitely broke that 50-day moving average support. So that didn't trigger a buy in the Dow. Looking at the NASDAQ, the stronger of the indexes out there, we certainly had a gap down on Thursday, but look at, we're barely below the 30-day moving average, showing good relative strength in the NASDAQ, basically sitting right now on support. Time for a bounce? Pay attention to the opening this morning. It'll give you some kind of indication looking at the high of the first hour and seeing whether we go above that high or below the first hour's low, giving an indication of where we're going for the week. Next, let's take a look at the Russell 2000. Again, did not hit the 50-day moving average. Was one of the bigger pullbacks that we had in the market, took place in the Russell, and we see that it broke through this level of support. And now we're headed for that potential 50-day moving average. Is today the day we're going to get a bounce out of the Russell? Time will tell as we move forward into this week with very little economic announcements. And what's going to make the market move this week? Well, unless there's some big unsuspected news, it's just going to be normal market cycles. Are they ready to kick this thing, or are they going to take it lower? Watch that first high in the first hour and the first low in the first hour to give you some indication of where we're going. Looking at the VIX, it did poke up a little bit as we would expect it to under these circumstances, but where is it that we're sitting? Only at 15, which by all reasonable tenets is not all that high looking at the VIX. So with that, let's then take a look at some of the different sectors in the market and see how they did as we had our first pullback of the summer. And looking at the bond market, we're looking let's click back one more, sorry. We're going to look at TLT, our ETF, for bonds, and we see, the opposite of what we would expect, the bear market in that bond market. Remember, we talked about this when it went up and hit that 30-day moving average. We said that could act as resistance. That's exactly what's happened. Market went down, and so did the bond market in this bearish market that we're seeing in bonds. Next, let's take a look at that safe haven in the market that we call gold and see exactly what that's done. It's been in a bit of a bearish market itself, and look at there, looking at a cross on the 30-50, heading up and going to breaking above the current trend. So as the market pulled back, yes, there was some movement into gold. Looking at the kind of volume for the week, let's take a look and see if we had volume as we got this pullback. And there we are with the spider, and we see that again sitting on the 50-day moving average. And look at the last 2 days. We got some kind of volume in selling, some of the bigger volume that we've had since June. And so it did kick off with a bit of volume as we saw a bit of a pullback in the spider, and it did have some oomph to it as the market has gone down and tested that 50-day moving average. Can you expect a bounce today? Well, again, let me key to this fact. If you look at the first hour, you look at the opening high and the opening low for that first hour, whatever that high or low is for the first hour, where do we trade after that? Are we going higher than the opening high for the first hour, or are we going lower than the low for the first hour? And then finally, let's look at financials. XLF certainly not had any big news to make that change, but with the overall market, it pulled back to the 50-day moving average as part of the things that markets do. So there we are with financials, a bit of volume as we saw it pull back and really mimic the overall S&P. Well, and then taking a look at oil, we're in summer. Where's it going? Looking for new highs. We're sitting right there at the new highs for the summer, and we'll see whether oil kicks back up and goes into these higher highs and into some blue sky for the previous 3 months. And with that thought, this is stocks to watch. And for those of you that are gold members, stick around. We'll look at our stocks that we like to watch each week and see how they did relative to the overall market. For those of you that are not gold members, if you'd like to see some more free videos from Options University, go to www.optionsuniversity.com/free gold. With that thought in mind, thank you, ladies and gentlemen, for being here. This is Butch Shorrock. It's Market Forecast with Options University. It's Monday, August 19th, 2013, and thank you.